If you expect the market to justify itself clearly, PMI is the ticker that refuses. Picard Medical Inc. trades on NYSE American under PMI. It is a US-based medical device company incorporated in 2021, headquartered in Tucson, Arizona, with about 75 employees and operations across the United States, Europe, and other international markets. In a standard medtech framework, valuation should move slowly. Hospital adoption, reimbursement coverage, regulatory milestones, manufacturing scale, and cash runway. Yet during regular hours with trading already underway, PMI moved like a narrative-led microcap. The snapshot investors saw, rounded naturally and kept in original currency, was stark. Price around 2.4 USD, up about 0.4 USD, roughly a 20% gain. Intraday range around 2.2 USD to 2.6 USD. Previous close about 2.0 USD, open about 2.6 USD. Volume about 15.6 million shares. Shares outstanding about 73.7 million, implying market cap around 177 million USD. Trailing 12-month revenue about 4.8 million USD. Trailing 12-month net income about negative 32 million USD. EPS about negative 1.6 USD. No PE ratio, no dividend, no analyst targets displayed. The 52-week range, about 1.9 USD to 13.7 USD, confesses the emotional cycle. This ticker has already been priced for a miracle and punished back down within 1 year. In conventional medtech, the largest intraday repricings usually follow high signal gates: FDA approvals, pivotal clinical trial readouts, major reimbursement decisions, or large commercial contracts. Conference visibility and early milestones matter, but extreme moves typically require unusually decisive, quantified data. PMI's move therefore reads like a fundamentals mystery. The market is repricing probability faster than public evidence density. The company's anchor product is the SynCardia Total Artificial Heart, positioned as an artificial heart intended to replace the pumping function of a failed human heart in advanced heart failure. This is not a consumer device. It is a system therapy embedded in surgery, ICU management, clinician training, service support, and payer reimbursement. Commercial success depends on ecosystem fit, centers willing to implant, outcomes that justify use, reimbursement that covers cost, supply reliability, and unit economics that can scale. Picard leans on SynCardia's regulatory lineage for credibility, citing FDA approvals, the 70cc TH in 2004, the companion C2 driver in 2012, the Freedom driver in 2014, and the 50cc TE for pediatric and small patients in 2020. Those years matter because they imply clinical history. The company also highlights implantation experience across many countries and thousands of implants, suggesting an installed base and clinician familiarity. But PMI is not being repriced for the installed base. It is being repriced for what it promises next: Emperor, described as a next-generation, fully implantable, driverless, total artificial heart. This is the core issue because it can change the fundamentals. Many TACH systems rely on an external driver to power and control the implant. External dependence can restrict mobility, complicate discharge planning, increase caregiver and hospital burden, and create infection risk pathways. That external driver is a commercial constraint. A fully implantable, internally powered system could expand candidacy, improve patient experience, simplify center operations, and strengthen reimbursement arguments, expanding TAM and raising the commercial ceiling. Now the tension and why investors feel the story is mysterious. Fully implantable systems are harder, slower, and more capital intensive. They increase engineering and manufacturing complexity, power management, heat dissipation, long-term durability, fault tolerance, biocompatibility, and they increase regulatory scrutiny because failure stakes are higher. Longer development consumes cash. Cash consumption creates financing pressure. Financing often means dilution. That is why the displayed fundamentals matter. Revenue around 4.8 million USD versus net loss around 32 million USD implies a burn profile that can force capital raises. Even a transformative platform can become shareholder hostile if it requires repeated funding while evidence matures slowly. The late 2025 public timeline shows why Emperor became the magnet. On September 22, 2025, PMI highlighted advances in patent protection for fully implantable artificial heart technology. Patents are supportive, but not clinical proof. On October 24, 2025, PMI issued a statement about intraday stock price movement, unusual in mature liquid medtech where companies rarely comment on daily volatility unless prompted by exchange inquiries or abnormal trading. This signals PMI's volatility is structural. On November 14th, 2025, PMI reported third quarter 2025 results and emphasized corporate achievements such as completing the IPO, expanding patents, and strengthening board independence. On November 19th, 2025, PMI announced first in vivo implantations of the next generation Emperor Taj. In vivo means in a living organism. It matters because physiology can reveal failure modes, bench tests may miss, so it can reduce technical uncertainty. On November 26, 2025, PMI said it would present the next generation fully implantable SynCardia TAH at ISMCS 2025. On December 3rd, 2025, PMI said the CEO would present at CSI Focus DHF 2025 in Frankfurt, Germany. These are credibility and visibility catalysts that can matter disproportionately for microcaps. The mystery persists because investors cannot yet quantify the probability shift being priced. In vivo implantation is meaningful, but headlines do not automatically provide what investors need. Duration, endpoints, complications, repeatability, and the remaining path to human feasibility and regulatory engagement. Without that density, investors infer, and inference is where narrative can outrun evidence and price can overshoot fundamentals. Three hypotheses frame what may be happening. First, over-extrapolation. The market may be collapsing multiple future gates into one milestone, even though early animal success often stalls before human feasibility due to durability, manufacturing, or regulatory hurdles. Second, liquidity mechanics. Despite about 73.7 million shares outstanding, the effective float may be thin, so volume about 15.6 million shares can drive exaggerated order flow moves typical of microcaps. Third, financing shadow. With revenue around 4.8 million USD and losses around 32 million USD, funding risk is real, and the market may be temporarily discounting dilution concerns because Emperor is compelling. Even without computed RSI or MACD, investors can stay disciplined using visible price structure. Intraday low around 2.2 USD is nearest support. Intraday high around 2.6 USD is nearest resistance. Previous close around 2.0 USD is a memory level if mean reversion deepens. Open around 2.6D is a pivot. Holding it supports momentum. Losing it raises exhaustion risk. The outlook is conditional. If Emperor's pathway becomes denser with evidence, more detailed in vivo results, clearer steps toward human feasibility, credible regulatory engagement, manufacturing readiness, and a transparent funding plan, then the narrative premium can harden into a durable re-rating. If disclosures remain headline-heavy and detail-light, the market can replay the pattern implied by the 52-week range. Price a miracle, then punish belief. Short-term traders can frame risk around visible levels. Acceptance above about 2.6 USD supports continuation odds. Failure raises retest probability around 2.2 USD and makes about 2.0 USD relevant on deeper fade. Medium-term investors should look for base building above the prior close area. Stability suggests durable demand. Collapse suggests transient liquidity. Long-term investors should treat PMI as milestone-driven. Scale exposure when data density rises and de-risking is measurable. Reduce exposure when capital needs dominate progress. That is the simplest framing of PMI right now. A referendum stock on whether Emperor becomes a scalable, fundable, clinically viable future fast enough to justify the market's repricing. And before we wrap, ValueStir is always listening. If there is a public or private company or a newly listed name or even a stock or coin that is planning to list and you want it investigated with this same evidence-first approach, drop your tip in the comments. Tell us the ticker if it exists, the company name, and what feels off or overlooked, and what you want verified from the ground up. Also, to everyone who keeps coming back, who watches through to the end, who subscribes, hits like, leaves thoughtful comments, and shares these episodes outside this channel, thank you. Your support is the engine that lets us go deeper, stay sharper, and pay you back with better, more precise work. This was ValueStir.